My name's Nick Samios. I'm the Director and Fund Manager here at Hermes Capital, and I'm your host. So once again, welcome. Just a reminder to like, share and subscribe to Lunch Money on YouTube or to our podcast if you prefer to listen. Let me open up by asking you a question. Has the world gone crazy? And the answer is, of course, yes. But I've always said that all we can do every day, jump out of bed and deal with what's in front of us and look for opportunities. And to that end, let's ask our panellists how we should go about finding opportunities in these crazy times. I'm going to start off with Neil Cussen. Neil is a partner at Deloitte, restructuring. How are you going, Neil?
You're going pretty well, Nick. Thanks for inviting me on the panel today.
You're very welcome. What's been keeping you busy these past couple of weeks?
Really just conversations in the market about opportunities and I guess when those opportunities should present themselves. When will COVID sort of slow to a point where business needs to make some harder decisions than they've probably been forced to date? And, those businesses where, hey, will I get more empathy with a balance sheet restructure right now rather than waiting to, say, post-COVID? And talking to my lenders, talking to my financiers about when is the best time to probably look at those balance sheet restructures as against a later management and operational restructure, I guess. So those conversations are happening a lot, and a lot of virtual meetings still occurring, both in the court, mediation and creditors meetings, which have been pretty interesting to try to get a good result for creditors. But I think everyone's sort of towing the line to be helpful and trying to preserve businesses and doing all the best they can to get past these, strange times. So, it's been an interesting 3 months.
So it's interesting what you say there because, we'll get to the big thing about the cliff that everybody's talking about. And obviously for a lot of restructuring people, the phones have been pretty quiet these past month or so. But you're saying that people are now beginning to have the conversations about maybe doing the restructuring. I call it under the cover of COVID, if you like. But people are beginning to get more serious about that now.
Yeah, they are, and those conversations are more frequent. And I guess this in the press where numbers are easing, New Zealand's opening. What does that border look like for a small trans-Asia, New Zealand, Australia, Pacific Islands sort of economy, particularly for tourism? And there's a lot of tourism operators hurting where they're trying to look at restructures now so they can come out the other side. Particularly, there's some probably tourist operators that probably will miss a whole year when you take into account the bushfire season. So there's a lot happening in that particular industry, and also building construction is probably the two main areas, hospitality and building construction, that we're seeing those conversations happening. And while secured creditors have a number of rights in the current system, it's the burden on unsecured creditors I think is the real concern going forward.
Right.
And to use your terminology, a cliff, look, that's getting banked up.
Yeah.
And ScoMo's basically given people 6 months not to pay their debts. So
when you say burden of unsecured creditors, are you maybe thinking like a domino type effect? If one business shuts, is that what you're talking about? That sort of thing?
Well, that is one aspect, but I just think it's a plethora of different businesses and different industries that are affected by this. And certainly, if your 3 major suppliers or customers are impacted, then you are certainly going to be impacted depending on what your concentration risk is.
Mm-hmm.
It's certainly going to be tough times.
Okay. Well, look, hold that thought, Neil. We'll come back to you in a moment. We'll introduce our next panellist, Alison Robertson from HWL Ebsworth in Perth. How are you going, Alison?
I'm really well, Nick. How are you?
Fantastic. And what's been keeping you busy this past week or so?
The past week or so, we've got a fair degree of existing litigation that has been rolling along throughout this COVID period, if you can call it that. So I think the crisis hasn't really appeared to slow down people that are already in disputes, especially the more complex ones. And of course, there are court timetables that still have to be complied with. So, I mean, that sort of work is rolling around in the background still, and people, perhaps even more so because of the crisis, are really keen to get an outcome in their existing litigation. The other thing I've seen in the last week or so is the banks reaching out to their customers who have availed themselves of, you know, deferrals or other COVID-related measures that the banks have been prepared to put into place, to just touch base with them. You know, how's it going? What does it look like in the coming weeks and months? And seeing that the banks are genuinely trying to assist the customers in those positions, but also to formalise arrangements. So we're starting to see a little bit of a flow of deeds of forbearance and deeds of settlement and release and the like, to try to get some firm understanding between the customers and the lenders about what's coming up.
And how far reaching are these deed of forbearances? You know, are they reaching down 6 months, 12 months?
Absolutely, horses for courses. It all depends upon the nature of the customer's business, you know, and where their exposure lies.
Right. And following on, so that's what you're seeing from the banks. It's interesting. I mean, in people that we've been speaking to with over the weeks here recently, have been saying that the banks are very much looking after their existing customer base, so, or allocating their time and resources. If you want to apply to a bank and you're new to that bank, that's going to be tough. But it sounds like you're saying that they are definitely being proactive with their current base.
Absolutely, that's what we're seeing. And the other thing I've seen a lot of in the last couple of weeks are inquiries from landlords and tenants, because like the other states and territories in WA, there's been new legislation introduced to COVID-19 response legislation, regulating in a brand new way the relationships between landlords and tenants, both commercial and residential. Particularly for some landlords, you know, it's presenting some real challenges, the extent to which they can't enforce their usual rights, the extent to which they are required to give waivers or deferrals of rental. So for some significant landlords, you know, this is going to be challenging. And then from the tenant's point of view as well, you know, they're reaching out to us for advice about what position they're coming from, what bargaining tools they have, and how they can use the benefits of this legislation, I guess, in conjunction with their other COVID tools to be able to survive and come out the other end.
Look, I think, I mean, I've certainly heard of, you know, there are some examples where tenants are also, maybe tenants that aren't in industries that have been hit by COVID are still trying to, I guess, not let a crisis go to waste. Are you seeing any of that?
Absolutely. Yeah, so tenants who aren't in hard-hit industries, also tenants who were financially distressed prior to COVID-19, but taking advantage of the opportunities that these new rules are presenting to them.
All right, now hold those thoughts, Alison. We will put you on hold. We'll come back to you in a moment. I'm just going to introduce Mark Jason, our third panellist today. G'day, Mark. How are you going?
Very well, thanks.
By popular demand, we've got Mark back again. What has anything sort of in the last couple of weeks? How are you finding things?
Thankfully, quite a few settlements in the last week or two, and a few more due in June and early July, which is gratefully appreciated. They were certainly put on hold for a while.
I didn't say what you do. I mean, so you're in the business of buying and selling businesses. So when you say settlements, you mean business
transactions? Yeah,
fantastic.
Exactly.
People buying businesses.
We traditionally transact 700 businesses a year in Australia and New Zealand.
Yep.
And I know that in my office alone, we lost over $50 million worth of deals when COVID hit.
Yep.
But it's nice to see a few deals starting to go through. And inquiry rates are at record highs at the moment.
Let me ask you, inquiry rates are high for people looking to buy or looking to sell?
Yeah, probably more the buyer job market. I think the sellers are sitting on their hands at the moment, even if they potentially don't have a viable business moving forward. A lot of them are holding on to their JobKeeper and their rental abatements and that not making a move. But our actual inquiry rates, so demand side economics, are through the roof at the moment. And we're seeing a lot of people looking to buy a job, a lot of people wanting to secure an income come the end of, mortgage holidays and the like.
And how do you think they're going with raising finance to buy those businesses, or are they cashing in? Are they cashed up, or what's the general?
Good question. Finance is going to be tough. I think the banks are, post Royal Commission, finance was tough, and now banks are looking at their risk profiles and things like this. We're going to be looking at second tier lenders. We're pushing. We're encouraging our buyers to go to brokers, because brokers know where the lending is going to be available. There's a lot of equipment finance and a lot of vendor finance is coming into the play as well.
Right. So you're seeing you're able to get the people that are selling their businesses to take a vendor finance position to wait for their money.
I think these days with the PPSR and the like, I think it's not as onerous as it was perhaps 12, 15 years ago. As long as they've got available equity, there's some security there, and there's a few different ways of securitizing the loan. Then it's a viable option. You're just releasing equity that the banks don't have an appetite for at the moment.
Yeah. And I guess from the buyer's point of view, it makes sure that the vendor's not selling you a dummy pass, I suppose.
And that's one option, but I think also for a vendor, the availability of finance and also the interest that they'll get over the time are both positives and can increase the sale price quite substantially.
And what about what sort of industries?
Oh, look, we have close to 2,000 businesses on the market in Australia alone, so we're across all industries. Transport, logistics, medical, they're all moving. We've even sold a few hospitality businesses in the last week.
Is that right?
Yeah, it is. There's a few gym sales waiting in the wings, but business to business, business to government is quite strong. People looking for manufacturing, so our manufacturing businesses, whether it's packaging, contract packaging, food manufacturing, have all had very high inquiry rates over this period.
Right. And there's a few of those sorts of businesses around, the manufacturing and the packaging. Yeah.
It's not to say that they haven't been hit by Corona or down, but some of them have pivoted to become B2C for a while. Others are seeing a resurgence in their orders. So there are strong businesses out there, definitely. Online has inquiry rates have gone through the roof, though, in anything online at the moment.
Okay. All right. Well, look, what we'll do now is we'll just bring everyone in together. Neil, in your business, do you deal with business brokers much, or what sort of when you're selling businesses?
Yeah, we do. We get inquiries from business brokers that they contact us when they see a business that may have gone into administration. That they believe they can help us, particularly with their large database of buyers and interested parties. And look, that's always welcome to make sure that you cover the market. And we've got a duty, particularly under certain aspects of the Corporations Act, to get the best possible outcome. And so we're happy to tap into that broker network and be assisted by those teams.
Yeah. Okay. All right. Well, look, let's take a look at our headlines now. So we've bunched three of them together here. The first one is D-Day looms for banks, over 224 billion in loans. Now, this particular article here, it's referencing obviously these loans that were deferred as part of the as part of the measures to deal with COVID in the first place. Apparently there's 224 billion in loans that have been deferred. That's 745,000 loans approximately. And this article goes on to say that if those loans weren't to be treated as deferred loans, but rather were to be treated as impaired loans, it'd basically, it'd more or less, quote unquote, more or less wipe out the bank's capital. So it's potentially quite serious. I wonder, just starting with you, Alison, what you've been speaking to the banks, do you think, are they talking about potentially extending these deferrals, or are they, waiting for it all to come to an end?
I I don't know that they're talking necessarily about extending the deferrals, but I do think that they're taking a horses for courses approach. So I think that what they're more than prepared to do is listen to individual customers and their needs, and work out an arrangement with them that, you know, is within the bank's legal obligations and also its own internal policies, and of course subject to all of the regulation that sits over the top of the banking industries, to see what they can do to assist individual customers to be able to, you know, work it out through this period. So I don't know that there's going to be a sort of a blanket extension of the deferrals. I'd be interested to see if, you know, if one bank came to market with an announcement that they were doing a blanket extension of deferrals, you know, as things historically go, that other banks would likely follow. I certainly haven't heard any rumours to that effect, but I do think that despite the end of September existing deadline, that banks would be prepared to continue to work with their customers on an individual basis.
Well, look, speaking to finance brokers, I mean, it's a bit of a double-edged sword for businesses, because on one hand, obviously, deferrals are great. But on the other hand, if the banks know that if you've deferred with them, or if they know that you've deferred with one of the other banks, they're very reluctant to extend you fresh credit, you know, for fresh credit and that sort of thing. Neil, I was speaking to one of our mutual friends recently. He was saying that the banks, one of the banks in particular was looking to double the number of people working in their restructuring, you know, bad bank workout area. And you know, when I heard that, I've spoken to some other people, and it seems that pretty much all of the major banks are certainly gearing up. I mean, is that what you're hearing?
Yeah, look, I think after the GFC, there was a lot of, you know, 4 or 5 years on, 4 to 6 years on after that, there was a lot of senior bankers in the restructuring area that probably were retiring, took some redundancies, and there was sort of a new team sort of came into all the banks, and some with probably less experience than their predecessors. But what we're seeing is, I guess, consultants moving out of the banks in those secondment areas, and the banks wanting to redeploy their own people into credit and risk. So there's less redundancies in those banks. So we're seeing sort of a new wave of people being coming to top up those areas.
It could be, it certainly could be baptism by fire if things are going to be the way they, you know, if you look at some of these headlines, you know, D-Day and you know, prepare for shock, and they're talking about cliffs and all that sort of stuff. You certainly need to learn fast. Just looking at that third item there from the ABC, not enough liquidators to deal with coronavirus-related corporate collapses. I mean, is that what do you reckon, Neil? Is that the case?
Look, I probably wouldn't go that far at this stage. I mean, the regulators has put in place different procedures which has reduced the number of registered liquidators in relation to the way they pay fees and the way they deal with payments by liquidators and their levies on them. So the numbers have come down from sort of 900 to sort of 680 mark in the last year to 2 years. So there has been a reduction, and that's been due to the regulator imposing those levies. But I think at the moment, there should be a reasonable amount of coverage nationally to deal with issues at the moment.
I wonder, Alison, just, if the liquidators are going to be run off their feet and the banks aren't really, they're going to have a lot of new staff in these areas, is that going to be putting pressure on law firms?
Do you mean pressure on law firms to be able to provide legal advice to the liquidators?
Yeah, well, to step up and fill the gaps. I hope
so. I think in relation to ASIC's comment that there may not be enough liquidators, I think that across Australia, across all of the accounting firms that have teams that practice in insolvency and reconstruction, there is likely enough people taken as a whole to be able to handle the anticipated workload. Obviously, the registered liquidator, him or herself, doesn't have to do all of the work. I have heard, though, amongst the big four accounting firms that people are being upskilled and redeployed out of the less busy areas and into the reconstruction and insolvency teams, as the banks have been doing to sort of anticipate that resourcing need. In turn, yes, I think if I keep hearing this word tsunami. I don't know that it's going to be that big, to be honest, but to the extent there is a significant increase in work driving formal insolvencies, then naturally the knock-on work for lawyers is going to be there, especially lawyers in the corporate insolvency and reconstruction space. But I think obviously it's not just the lawyers; it's the valuers, the business brokers, and all of the other professional services that external administrations require.
I wonder, Mark, if you've got someone who approaches you, they're selling their business, and they're under pressure. If they don't sell it, their bank might close them up. I mean, I guess you must get a bit of that, and that would pose some special challenges, I suppose, because on one hand you want to get the business sold, on the other hand you've got buyers, you don't necessarily want to sell them a pup either. How do you deal with that?
I think it's about being honest. If the guy's got a liability of a lease or something and he needs to remove that liability, there's a reason the business is being sold at a low price, and it's only going to sell for. It's not going to sell for the full value for a full for a high value if it's a fire sale, really. I think there's a couple different cliffs there in the headline that you've got there. There's a business cliff and there's a property cliff, and I don't. As far as businesses go, there will be some businesses that won't be viable moving forward, just to the reduction in consumer spending, discretionary spending, and the like, and the restrictions on travel and whatnot. But as far as the property goes, I don't see the banks letting a lot of these properties go under, and certainly the CEO of ANZ's already come out to say they were going to work with people, as Alison said. The banks are too invested in the property market to really to see that go south.
Yeah, so Alison might get busy with deeds of forbearance by the sounds of things, if that's an informal workouts, I suppose, might be the thing. All right, listen, we'll move along to our next slide. This asset write-off up to $150,000 and 100% write-off. I guess we're all trying to find how we can justify jet skis as a business expense, perhaps. What is this? Do you think is this enough, Mark? Do they need to be doing more, or is the government got the settings right? What do you think?
Look, strong businesses will be able to use it. Businesses that were weak or distressed before COVID won't be in a position to use it. But it's great news for business sales, because it's not just new assets; it can be second-hand assets if it's a continuation of the previous one. And in business sales, where there's a high asset value, whether it's a transport business or a civil engineering or the like, or injection molding or whatnot. Those businesses, if they're buying other competitors or like businesses, can write off a lot of the acquisition value straight away.
Wow. This is where they're splitting off the purchase into splitting the business off from the assets.
Yeah, as long as they've got a valuation on those assets, or they've got reasoning for the value on them, then they're fine to write them off individually up to $150,000 each. So you can, potentially buy a trucking business with 100 trucks valued at $150,000 each if you're that way inclined.
What do you think, Neil? Is this impacting the restructuring area at all, or what does it make a difference in your world?
I think it's helpful. I don't think it's the end game. Yeah. There's probably other issues in business. There's payroll tax and stamp duty, which is we could talk about for an hour, but there's other areas that I think would make more impact. On particularly the middle to larger market.
I mean, just on the subject of, this is obviously, we're talking about people, availing themselves of tax relief. I mean, are you hearing anything out of the ATO? Are they still pretty much sitting on the sidelines, or are they agitating more?
No, they're quiet in terms of enforcement in my business anyway. From what I've seen in my discussion with the AJ, they want to be helpful, and we saw similar in just after the GFC where they really slowed down in terms of their enforcement action. And just look at the winding up list now compared to where it was in February, and there's limited new winding ups compared to what was there, and I think the ATO is just towing the line, quite frankly.
What about you, Alison? Would you reflect that, or do you see
absolutely? No, I think the ATO's doing, in inverted commas, the right thing, along with the other COVID stimulus mechanisms that are about in the economy. I certainly don't think the ATO would want to be perceived to be the government agency that has forced a taxpayer into a particular position when they would otherwise have been able to dig their way out. Of course, this can't last forever. It's the same as all of these measures, So whilst the ATO might be deferring, at some point in the future, tax will have to be paid. But I agree with Neil. We all get these daily listings of applications for windings up and other formal insolvency appointments, and usually there's a decent sort of a list of ATO windings up. It just doesn't happen at the moment.
It's been a dearth. I mean, I thought there was something wrong with my printer the other day. I mean, there was nothing there.
Where's the second page?
Yeah, exactly. All right, look, let's have a look at our next one. Yeah, this one we've pinched from you, Neil. This is the Deloitte Access Economics graph of consumer confidence, and you can see that was a cliff back when obviously when Corona struck. I mean, it has been this is consumer confidence. It has seemingly been coming back. I mean, look, I'm not a share market expert, but gee, the stock market's been up and down, hasn't it? I mean, what do you think, Mark? Do you? I guess you're saying you're getting a lot of inquiries. So does that mean that sentiment is positive?
I think it's more people looking to continue their cash flow, whether it's buying a job or whether it's increasing their cash flow by buying up competitors and the like. But I see that headline there, COVID derails retirement plans. I mean, I've heard it so many times. And the fact of the matter is these guys aren't getting any younger. And I often have this conversation with people who have been in their business 20, 30 years, and they have a perceived price or value in their mind, and really it's where the market is at a point in time.
Yeah.
And if they don't meet the market, they may end up being holding the baby, I guess. It's a morbid thought, but at some stage they really need to just meet the market and enjoy their retirement.
Yeah, I mean, look, it's a tough conversation to be had, isn't it? I'm sure that Neil and Alison have seen people files cross their desk where, someone could have sold their business and had a retirement, maybe not quite in the luxury that they'd hoped. But
the best way I approach it is that we have a database of 7,500 transactions, and no one has that. And it's like comparing apples for apples. It can be done in the housing sector, but not so much in business. And so if you really have a good foundation of comparable sales like that, you can take a vendor through that process and give them a good understanding of why their business has that value. Yeah. What about, I guess, again, none of us are stock market analysts here, but, the Dow was down 1,800, was it, last night? Obviously, this headline, the ASX plunging 3%, I've whipped off the papers this morning. I mean, there has been a lot of confidence in the market, but look, I guess we'll move on from that. What's the next slide that we've got? Yeah, now I appreciate, Neil, that you maybe not too much you can say about this one, but I was going to ask Alison this particular. I mean, it's a fascinating insolvency to watch. There's a whole bunch of people. There's people advising for. I think Mentor are acting for one of the potential buyers, and there's other firms acting for the bondholders in particular, I'm thinking. And there's $2 billion in bondholders in bonds. I think there was 900 million odd that was just raised back in November of last year. I mean, how do they get leverage, these people, Alison? They're talking about trying to get a seat at the table. How do they do that?
Well, it's a really difficult question because, at least under the existing law, as I understand it, they're unsecured creditors. I'm unsure, aside from their collective clout as potential users of Virgin, and their collective clout as, genuine Aussie investors who thought that they were getting into something safe at the time, and perhaps even the sheer number of the people and the public sentiment associated with it, like this article. I'm unsure where their legal leverage lies otherwise, because as everybody knows, under the Corporations Act, unsecured creditors are ranked at the bottom, unfortunately, for the bondholders in this situation.
Well, the other thing is that I guess not necessarily this article, but other articles I've read about this are talking about, the bond market is relatively fledgling in Australia, and it's, if you look at the bond market in the US, for example, I mean, it's light years ahead, and it is, there is, we'd all love to have publicly traded debt, and if people get torched and end up getting nothing. What does it do for the bond market? So I guess, what do you call it, a bit of a moral hazard issue there?
Yeah, I mean, this article says that. It says it could affect public confidence in the emerging corporate bond market. I think that's true, but I'm uncertain from the administration of Virgin's perspective, to be honest, what difference that makes, in that the administrator, all he can do in this situation is call for proposals, which he's done, get them, which he's done, and then assess them and make a recommendation to the creditors as a whole as to which proposal would be in the best interests of the creditors as a whole. So he can't, he can negotiate the terms of the proposal, obviously, to get the best possible outcome for the creditors. But the proposals are what the proposals are, and we're working within the framework of the Corporations Act. So I think whilst there would be a massive amount of understanding and empathy for the bondholders, so lots of them are mums and dads, obviously, there needs to be a degree of realism about their seat at the table in this.
Yeah, well, I guess what's the Latin thing? Buyer beware, whatever it is. I mean, it's hard, but it is what it is. I wonder. Next time you bump into Vaughan Strawbridge at the water cooler, Neil, you might ask him if he'd like to come on, and we'd love to have a chat with him. I know it's a bit inappropriate at the moment, but maybe.
I'm happy to do that. I think what Alison said is very much correct, and our bond market is so unsophisticated here compared to Asia and America that they are just treated as unsecured creditors, and that's really where it stops. But I guess whilst my business is more a SME middle market business, the Deloitte team that is working on Virgin, working very hard to preserve that business, and if anyone can do it, that Deloitte national team at that top end of town will make sure that happens. So we wish them a lot of luck.
Yeah, look, I think we need that second airline. There's no doubt about it. All right, look, I think we'll leave it there as far as headlines go. I started off by saying, look, we do live in crazy times, and there's no question about that. What's interesting is the headlines this week. There was fewer headlines that I could use this week because the news in the papers are just full of a whole bunch of other stuff that we don't even want to talk about. But by way of wrapping up, I suppose, where do you think the opportunities are? I guess I'll start with you, Mark. Where do you think the opportunities are in the next couple of weeks?
There's certainly sectors that have have strengthened over this period and have got a higher demand, online, transport, logistics, and the like. But interestingly enough, if you look at the volume of sales in any country, hospitality is still going to be 80%. Now, there's a lot of people that own retail property, and those people are going to want to see the ongoing success of that retail property. So there will still be a lot of retail businesses that change hands over this period, whether it's because of their viability or whether it's because people are expanding or whatever those reasons, that is going to still take place.
Okay, so changing hands of retail property, I guess, you know, as Stunning and Cher said back in the 60s, the beat goes on, I suppose. Alison, what about yourself?
In terms of opportunities, I would like to think that most WA businesses aren't going to, or not just WA, Australian businesses for that matter, aren't going to sit on their hands and wait until the end of September and then say, right, what do we do now? I would like to think that in the shorter term, people are going to start getting together their projections, getting together their cash flows, working out what it looks like on the other side of 30 September. And I do think that that is going to lead to a lot of work in the restructuring space. And I don't necessarily mean formal restructuring or through formal insolvency appointments. I mean restructuring their businesses and re-gearing up for when the benefits that they've been able to enjoy during this period ease out. So I see a real degree of restructuring work in our near future. The other thing, of course, that's coming up towards the end of September is the end of the automatic safe harbour protection.
Right. Yeah.
So I anticipate, again, giving business the benefit of the doubt, that people will again turn their minds to whether there is a need for safe harbour protection when the automatic protection at the end of September comes to an end. Because I really do think that there are going to be a lot of businesses that will be teetering in terms of their question of solvency after September, and so it's really important for directors to start thinking now about safe harbour protection once the automatic one falls away.
You know, that is very interesting. I mean, look, we're coming to the end of our time, but it's very interesting. You certainly wouldn't want to emerge from this when the sort of quasi, you know, whole economy and safe harbour when that gets lifted, and then all of a sudden you find yourself you know, potentially trading insolvent without that protection. So you're really saying, in more ways than one, people need to get ahead of it. Get ahead of it on terms of their business, maybe. Yeah, interesting. What about you? Just by way of final comments, Neil?
Yeah, I think the opportunities are to have those conversations. What Alison was referring to, and I think the time is to have those opportunities now. Hopefully, there's a bit of relief for hospitality with borders opening, a bit more relief for people moving around with retail, but that will still be a tough market. But I think those conversations and people planning early, planning, now through August, not waiting for the 20th and 27th of September.
Yeah.
So that'll be the opportunity, I think.
Okay. All right. Look, we'll leave it there. Thank you to everybody who's watched us live. Just shout out to those that watch us over the weekend on YouTube or listen to us on their favourite podcasting platform. Thank you, Mark Jason from Link Business, Alison Robertson from HWL Ebsworth in Perth. Thank you for joining us from all the way. I look forward to getting to Perth. Yeah, God knows when that'll be. And Neil Cussen, look forward to seeing you too soon, Neil. And thank you for coming on and joining us.
Cheers.
Thank you very much.